Welcome back to the Psychology of Execution. In our last session, we talked about analysis, paralysis, the inability to act because of fear. Today, we are going to talk about the exact opposite. We are going to talk about acting too much, too fast, and with too much aggression. We are going to talk about the single, fastest way to blow up a trading account, revenge trading. We have all been there. You can probably feel the memory of it right now. It starts with a loss. Maybe it was a bad beat. Maybe you followed your rules, but the market spiked against you. Or maybe you made a stupid mistake and got stopped out. You see that red number on your P&L, and something inside you snaps. You don't feel sad. You feel robbed. You feel a burning sense of injustice. You feel like the market reached into your pocket and stole your money. And instantly, your brain screams one command, get it back. You don't just want to make money anymore. You want justice. You want to punish the market for hurting you. You want to prove that you are not a loser. So what do? You immediately open a new trade. You don't wait for a setup. You don't check your rules. You just click. And this time, you double your position size. Why? Because you need to win back the previous loss, plus a little profit to make the pain go away. The market drops again. You lose again. Now the red number is twice as big. The anger turns into panic. The panic turns into desperation. You enter again. Triple size. Leverage to the max. You are blindly clicking buttons, fighting a war against a screen. And 10 minutes later, it's over. Your account is empty. You sit there in silence, staring at the monitor, wondering, what did I just do? This is the spiral of revenge trading. And it is not a financial problem, it is a biological one. When you take a painful loss, your brain registers it as a physical attack. Your amygdala, the primitive fight or flight center, hijacks your brain. It floods your system with adrenaline and cortisol. In this state, your prefrontal cortex, the part of your brain responsible for logic, risk management, and planning, literally shuts down. You are chemically incapable of making a rational decision. You are a caveman trying to fight a saber-toothed tiger. But the tiger is a supercomputer, algorithm, and you are fighting it with your emotions. The tragedy of revenge trading is that you are trying to take revenge on an entity that does not know you exist. The market is not your enemy. The market is not your friend. The market is not trying to hurt you. The market is just a stream of data. It is indifferent to your existence. Getting angry at the market is like getting angry at the rain. Yelling at the storm won't stop you from getting wet. So how do we stop the bleeding? How do we arrest this spiral before it destroys our career? You need a circuit breaker. In the stock market, if prices drop too fast, the exchange halts trading. They literally pull the plug to let panic subside. You need to install a personal circuit breaker in your own mind. Here is the rule. You cannot think your way out of a tilt. When you are angry, your logic is broken. You cannot trust your own thoughts. So do not try to analyze the next trade. The only solution is physical separation. The moment you feel that heat rise in your chest, the moment you slam your mouse, the moment you say, I need to get it back, you must initiate an emergency protocol. Step 1. Hands off the keyboard. Physically stand up. Walk away from the desk. Leave the room. Go outside. Step 2. Change your physiology. Your body is in a fight state. You need to reset it. Splash cold water on your face. Do 10 push-ups. Sprint down the street. Do anything to burn off the adrenaline. Step 3. The 60-minute ban. Make a rule that after a painful loss, you are forbidden from placing a trade for 60 minutes. Why 60 minutes? Because that is roughly how long it takes for the cortisol to leave your bloodstream and for your logical brain to come back online. During this break, you must accept a hard truth: the money is gone. This is the hardest part. Revenge trading is fueled by the refusal to accept the loss. You think, if I win it back right now, it's like the loss never happened. You are trying to erase the past, but you cannot erase the past. You must look in the mirror and say, I lost that money. It is not coming back today. And that is okay. I can make it back over the next month, but I cannot make it back in the next 5 minutes. Acceptance is the cure for anger. Once you accept the loss, the need for revenge disappears. You return to the neutral state. You return to being a casino. Remember, one bad day does not kill a trader, but trying to fix a bad day in 1 hour will kill a trader. The market will be there tomorrow. The opportunities will be there tomorrow. Your job is to make sure you are still here tomorrow to take them. Stop trying to beat the market. Stop trying to be right. Stop trying to force your will upon the charts. This leads us to the final lesson of this chapter, the ultimate mindset shift. If we stop fighting the market, what do? We surrender. Not in defeat, but in understanding. We surrender to the reality that we know nothing. In our next and final session of Chapter 1, we will discuss the pinnacle of trading psychology. We will talk about the trader's mindset accepting uncertainty.